Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm going to be talking about where I see soybean prices moving through the rest of 2018. Post the October crop production and WASDE reports, we've seen a little bit of a price rally in soybeans, and I'm going to talk about some of the factors that might see this be either sustainable or maybe limited in its upside potential. And just to give you a hint, I'm looking at it as being limited in upside potential, particularly due to the export market and what we're seeing as the potential for a record-sized soybean crop. The October crop production report placed soybean production at 4.689 billion bushels. This was lower than expectations despite yield going up to 53.1 bushels per acre nationally. The lower production level is based off of 514,000 acres coming out of harvested acres for soybeans in the U.S. A lot of these acres are shifted out of the eastern corn belt and Arkansas into the western corn belt and North Dakota, Nebraska, and Iowa. So, the recent weather issues we've been seeing, they may have implications for the final yield due to this large shift in acreage out west. But overall, we're looking at about 4.7 billion bushels, a record amount of production despite the rally we've seen recently. When we look at South America, right now Brazil's forecast to do a little over 4.4 billion bushels, and Argentina is at 2.1, recovering from last year's drought. Now this is the Brazilian production report. It looks like a trend yield estimate. It could be higher than this based off the last few crops we've seen out of Brazil. But all in all, there's plenty of soybeans in the world, and that's sort of turning us to consumption, and in particular the export market here for U.S. producers. Currently, the USDA is projecting 2.07 billion bushels of crush use for soybeans in the 2018-19 marketing year. I'm not going to discuss that much in this presentation. I feel like that estimate's reasonable based on the current price structure under and the reduced export levels. So I'm going to focus more on exports because the 2.06 billion bushels that they're currently projecting require us to pick up the pace of exports substantially. Through October 11th, export inspections of soybeans are 174 million bushels, which is 35% behind last year's pace. When we look at outstanding sales, which I'll talk about in the next slide, those are also lagging the pace. Basically, it doesn't look like other importers are picking up the loss of the Chinese market like we would like them to. When you look at last year and the huge amount of exports that Brazil did in the second half of the marketing year, and even the strength you saw from the U.S. in the latter quarter of our marketing year, you can see that tariff action start to pick up in a lot of forward buying and movement of soybeans. Thus far in this marketing year, we really haven't seen much Chinese movement. In the last export inspections, we saw about 5 million bushels go to China, some of that out of Puget Sound, some of that out of New Orleans. But they still seem to be sitting it out, even though when you look at the prices between South American soybeans and U.S. soybeans delivered to China, U.S. soybeans are very competitive. So what I'm showing in this graph basically is that huge bump we saw in Brazilian exports, and they're projected to do another large amount of exports in 18-19, mostly at our expense. And when we look at our little up bump in the last quarter of 2017-18 marketing year, it doesn't seem like we're following through with that thus far in 18-19. In this graph, I'm showing outstanding sales, and that's sales that haven't been shipped yet for the 18-19 marketing year through October 4th. This is from the FAS export sales report of last Thursday. As you can see, China's well behind in sales, almost 272 million bushels at the same point last year. We have seen a bump from Mexico, and Canada's up some sales as well. But right now, it doesn't look like we're going to make up the difference in what China normally does. And it really does come down to, can China hold out if we want to see a sustained price rally in soybeans, in my opinion. There's been reports out of China indicating they want to reduce their reliance on U.S. soybean imports through a variety of measures, one of them including lowering crude protein requirements in hog rations. That's floating around out there. I'm not so confident they'll be able to hold out. I think they're going to need some of our soybeans, but they're doing their best, I think, to mitigate how much they take. When we're looking at the soybean prices recently, we've had a nice little rally out of that October crop production report that's followed through today, which is Monday, October 15th. I don't know if this thing's sustainable. It doesn't feel that way to me. Moving through the rest of the harvest year and toward the start of 2019, I think we're going to need to see some kind of production issues in the South American crop, or if China breaks and doesn't hold out completely on taking U.S. soybeans before we see a sustained upward movement. I think the upside potential is limited. So if you're thinking about marketing some soybeans, I'd take a good hard look at the price that we're seeing right now, because moving forward, right now ending stocks are set at 885 million bushels for the 2018-19 marketing year, and barring some kind of uptick in exports from the U.S., that may be in the low end of reasonable projections depending on what the crop ends up doing here in the U.S. I'd like to thank you for your time. You can find my weekly outlook and other daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu.